The term IPO, or initial public offering, marks the moment a private company goes public, selling its shares to the general public for the first time. It's a pivotal step for a company to raise capital, expand, and scale its operations. But like any financial tool, it can be misused, and no one demonstrated that better than Jordan Belfort, the infamous Wolf of Wall Street. Let's start with what an IPO really is. Imagine a company that's privately owned, like a startup. To grow, it needs money. Instead of borrowing, the company decides to go public. It offers shares to investors in exchange for cash. This is the IPO, a process that allows the company to raise capital while giving investors a slice of ownership. Now, here's the catch. IPOs are attractive because early investors often hope the stock price will soar after the public listing. But what if someone manipulated this excitement for personal gain? That's where Jordan Belfort comes in. Belfort ran a brokerage firm named Stratton Oakmont. On the surface, it seemed like a legitimate company. But behind the scenes, it was a well-oiled machine designed to execute a scam called a pump and dump. Here's how it worked. 1. Belfort and his team controlled shares of small, obscure companies that were about to go public. 1. They bought these shares dirt cheap, often at pre-IPO stages. 2. They then used high-pressure sales tactics, convincing everyday investors to pour their money into these hot new stocks. 2. This caused the share price to pump artificially. 3. Once the stock price peaked, Belfort and his insiders would dump their shares, making massive profits. 3. Meanwhile, the stock price would crash, leaving unsuspecting investors with worthless shares. One infamous example was Steve Madden Limited, the shoe company. Stratton Oakmont helped take it public, and Belfort manipulated its stock price through the pump and dump scheme. While he and his team raked in millions, investors were left in financial ruin. The IPO scam wasn't just about greed, it exposed major flaws in the financial system. Regulators like the SEC were slow to react, and by the time they caught on, Belfort had scammed investors out of hundreds of millions of dollars. So, what's the takeaway? IPOs can be incredible opportunities, but they're also a reminder to stay vigilant. Research the companies you invest in. Look beyond the hype and ask the tough questions. Because while Jordan Belfort's story may be entertaining, it's also a cautionary tale. What are your thoughts on IPOs? Have you ever been tempted by the promise of quick returns? Share your thoughts in the comments below.